Hello. In today's presentation, we'll briefly cover nomination, ensuring your Provident Fund goes to the right person, and withdrawal advances, which allow partial PF advances during emergencies. Let's explore how these work and why they matter. This slide provides essential information regarding Provident Fund scheme nominations for all members. Firstly, it is a requirement for members to designate beneficiaries. This ensures the member's Provident Fund balance is directed appropriately in the event of death. To formalize this, members must submit the online nomination form too. Regarding the distribution of funds, members can allocate their fund credit among multiple nominees, specifying the percentage for each. It's important to understand the rules around family nominations. Members who have a family are required to nominate only family members. Any nominations of non-family individuals by such members will be considered void. Lastly, a significant life event like marriage impacts nominations. Upon a member's marriage, all nominations made prior to the marriage automatically become invalid. Therefore, the member must promptly submit a new nomination. This brief overview covers nomination provisions, essential knowledge for every member. First, regarding nominations without family, a member without family may nominate any individual. However, upon acquiring a family, previous nominations become void, requiring new nominations of family members only. Next, concerning minor nominees and guardianship. When nominating minors, members must appoint an adult family member as guardian. If no eligible family member exists, any suitable adult may serve as guardian. Members may modify nominations at any time, using Form 2. Finally, on the effectiveness of these nominations, any nomination or modification submitted online becomes effective immediately. In this slide, we're clarifying the definition of family under paragraph 2G of the PF scheme. Understanding this is crucial for members. For a male member, family includes a wife, children, regardless of marital status, dependent parents, and a deceased son's widow and children. An exception exists. If a member proves the wife isn't entitled to maintenance under personal or customary law, she's excluded, unless the member later notifies the commissioner in writing to include her. For a female member, family encompasses a husband, children, regardless of marital status, dependent parents, both hers and her husband's, and a deceased son's widow and children. An exception allows a female member to notify the commissioner in writing to exclude her husband and his dependent parents, unless she later cancels this notice. Regarding adopted children, children legally adopted by others under personal law are excluded from the member's family. This slide covers the withdrawal provisions for housing from the Provident Fund. For a member to be eligible, a minimum of 5 years of fund membership is required. A crucial point to note regarding eligibility is that joint ownership is only permitted with a spouse. As per the EPFO Office Manual, granting a withdrawal for the purpose of purchasing a site, dwelling house, or flat in the name of the spouse is not allowed. Regarding withdrawal limits for a site purchase, the withdrawal limit is the lesser of 3 amounts: 24 months of basic wages and dearness allowance, the total employee and employer share with interest, or the actual cost. For the purchase or construction of a house or flat, the limit is the lesser of 36 months of basic wages and DA, the total employee and employer share with interest, or the actual cost. When a member purchases a property from an approved agency, for instance, government bodies, cooperative societies, or housing finance corporations, payment is dispersed directly to the agency, not to the member. The transaction must be completed within 6 months of the withdrawal. For members undertaking house construction, construction must commence within 6 months of the first installment and be completed within 12 months of the final installment. There are exceptions to these timelines. These timelines do not apply, for example, to hire purchase arrangements. A hire purchase arrangement is defined as one where the price is paid in installments and ownership transfers to the member only after the final payment. Timeline exceptions also apply when dwelling sites are acquired or houses are constructed by cooperative societies for member allotment. This briefing outlines Provident Fund withdrawal options for housing, a key member benefit. We will cover two primary scenarios. First, for home improvements. If a member undertakes necessary additions, substantial alterations, or significant improvements to their dwelling house, they can access an additional PF withdrawal. This withdrawal is financially capped at the lesser of 12 months basic wages plus dearness allowance, or the member's own share in the fund plus interest. This facility is accessible 5 years after the completion of the member's home. Second, regarding home renovation. A member is eligible for further withdrawals for the purpose of repairs or improvements to their home. This option is accessible 10 years after any previous housing-related withdrawal. The financial limit for a renovation withdrawal is consistent with that for home improvements, capped at 12 months basic wages and dearness allowance, or the member's own share plus interest, whichever is the lower amount.
There are three key areas concerning these refunds. First, excess withdrawal refunds. If a withdrawal exceeds actual expenses, this excess must be refunded as a single lump sum within 30 days. This refund first repays the employer's share, matching the amount originally withdrawn from it. Any remaining balance is then credited to the member's own contribution share. Second, failed transaction refunds. A full refund of the withdrawn amount is required if a member is not allotted a dwelling site, house or flat, or if an allotment is cancelled and the amount refunded by the agency, or if a member fails to acquire a site or to purchase or construct a house. Finally, general refund processing guidelines mandate that all refunds are issued as a single lump sum. Critically, these refunds are always credited first to the employer's share up to the amount withdrawn from it. Any balance thereafter is credited to the member's own contribution share.
This briefing outlines the recovery procedures for the recovery of improper Provident Fund withdrawals, specifically those intended for housing purposes. When a member misuses PF withdrawals for housing or if funds are improperly obtained, the EPF authorities have clear recovery protocol. Recovery is initiated based on several key grounds: using withdrawals for unapproved purposes, refusing a property allotment or site acquisition, not fulfilling withdrawal conditions, or failing to refund any excess amount withdrawn. The recovery process involves recouping the principal amount plus a 2% penal interest, typically deducted by the employer from the member's wages. Critically, this action is undertaken while the member remains in service. The allocation of recovered funds is structured as follows: first to the employer's share, then any balance to the member's contribution. Collected penal interest is directed to the interest account. Finally, significant restrictions impact future withdrawals. The member becomes ineligible for further PF withdrawals for 3 years from the misuse date or until the full amount, including interest, is recovered, whichever condition is met later.
This slide focuses on paragraph 68BB, which outlines the withdrawal facility for loan repayment. The primary objective of this provision is to enable a member to access funds for the repayment of outstanding housing loans. This applies whether the loan was taken individually by the member's spouse, or jointly by both. Qualification for withdrawal requires the housing loan to be sourced from an eligible institution, such as a state government, registered cooperative society, nationalized bank, public financial institution, or municipal corporation. Specific limits govern the withdrawal amount for a member, with the permissible sum being the lowest of the following three conditions. Firstly, an amount equivalent to 36 months of the member's basic wages and dearness allowance. Secondly, the sum of the member's own contributions and the employer's contributions, inclusive of any accrued interest. Or thirdly, the actual outstanding principal and interest amount of the loan. List of 12 nationalized banks in India. 1. Bank of Baroda. 2. Bank of India. 3. Bank of Maharashtra. 4. Canara Bank. 5. Central Bank of India. 6. Indian Bank. 7. Indian Overseas Bank. 8. Punjab and Sindh Bank. 9. Punjab National Bank, PNB. 10. State Bank of India, SBI. 11. UCO Bank. 12. Union Bank of India. As per EPFO manual, the following institutions may be considered for the purpose of grant of withdrawal under Para 68BB of the EPF scheme. Housing Development Finance Corporation, Housing Urban Development Corporation, Housing Finance Corporation of the Nation referred to in the Nationalized Housing Bank as Canfin Home Limited, Gujarat Rural Housing Finance Corporation Limited, PNB Housing Finance Limited, India Housing Finance and Development Corporation Limited, Housing Promotion and Finance Corporation Limited, Dewan Housing and Development Finance Corporation Limited, GIC Garivitta Limited, LIC Housing Finance Limited, Housing Development Finance Corporation Limited. Public financial institutions as per Reserve Bank of India. 1. Industrial Finance Corporation of India, IFCI Limited. 2. Industrial Investment Bank of India Limited. 3. Tourism Finance Corporation of India Limited. 4. Risk Capital and Technology Finance Corporation Limited. 5. Technology Development and Information Company of India Limited. 6. Power Finance Corporation Limited. 7. National Housing Bank. 8. Small Industries Development Bank of India. 9. Rural Electrification Corporation Limited. 10. Indian Railways Finance Corporation Limited. 11. National Bank for Agriculture and Rural Development. 12. Export-Import Bank of India. 13. Infrastructure Development Finance Company Limited. 14. Housing and Urban Development Corporation Limited. 15. National Bank for Financing Infrastructure and Development, NBFID, under the Companies Act 2013.
This briefing addresses paragraph 68BB, detailing the conditions for members to withdraw funds for housing loan repayment. The process is governed by these key conditions. Firstly, regarding eligibility requirements, a member qualifies after 10 years of fund membership. Secondly, concerning required documentation, the member must provide certificates or documents from the lending agency detailing the loan. Finally, the payment process. Upon proper authorization, the withdrawal payment is made directly to the lending agency. Crucially, payment is never made directly to the member. These are the essential conditions for housing loan repayment withdrawals under paragraph 68BB.
This slide focuses on a key provision, the non-refundable advance during unemployment, detailed under paragraph 68HH. This facility offers crucial financial relief for a member experiencing a period of unemployment. Eligibility requires a member to have continuous unemployment for at least 1 month after leaving employment from an establishment covered under the Act. Regarding withdrawal amounts, a member may access up to 75% of their total Provident Fund balance. This is provided as a non-refundable advance. To initiate the approval process, the member is required to submit an application following 1 full month of unemployment. This process ensures that timely support is readily available when members require it most.
A member may be granted such an advance in 3 specific instances. First, if hospitalization extends for 1 month or more. Second, if a major surgical operation is undertaken in a hospital. Third, if the member suffers from tuberculosis, leprosy, paralysis, cancer, mental derangement, or heart ailment and has been granted leave for treatment by the employer. Additionally, an advance may also be granted for the treatment of a member's family member who is hospitalized or requires hospitalization for 1 month or more, either for a major surgical operation or for the illnesses mentioned earlier. Please note that a member can receive a non-refundable advance from the fund for a family member only if the family member is currently hospitalized or is expected to be hospitalized for 1 month or longer. The advance shall not exceed 6 months of the member's basic wages and dearness allowance or the member's own share of contribution with interest in the fund, whichever is lower. This briefing details the Provident Fund's advance facility for marriages and post-matriculation education of a member's children. This non-refundable advance may be used for the member's own marriage, the marriage of their daughter, son, sister or brother, or for the post-matriculation education of their son or daughter. The amount sanctioned will not exceed 50% of the member's own share of contribution, including accrued interest standing to their credit in the fund on the date of authorization. Eligibility: minimum 7 years of fund membership required. Importantly, a member is eligible for a maximum of 3 such advances. This slide focuses on paragraph 68N, detailing non-refundable advances for physically handicapped members. To be eligible for this advance, a member must submit a self-declaration detailing their physical handicap. This advance enables members to acquire equipment to reduce hardship. The advance amount is limited to the lesser of the following 3 values: 6 months of the member's basic wages and dearness allowance, their total personal contributions plus accrued interest, or the actual cost of the necessary equipment. Finally, a key time restriction applies. A member cannot receive a second similar advance under this provision within 3 years of a previous advance payment. This slide highlights a key provision within the Provident Fund scheme: withdrawal within 1 year before retirement. Under paragraph 68NN of the scheme, a member is permitted to withdraw up to 90% of their total Provident Fund balance prior to their scheduled retirement date. 2 primary conditions govern this withdrawal eligibility. 2 primary conditions. Firstly, the member must have attained the age of 54 years. Secondly, this withdrawal option is available only within the final year leading up to the member's actual retirement, or date of superannuation, whichever occurs later. For example, if a member's retirement age is 58, withdrawal is permissible after the member attains 57 years. Similarly, if the retirement age is 60, it's permissible after 59 years. This provision gives members a lot of financial freedom as they head towards retirement. This slide briefing presents a substantial provision that significantly improves member retirement planning, the Varishtha Pension Bima Yojana withdrawal option at the age of 55. Paragraph 68NNN empowers members aged 55 and over to withdraw funds for dedicated pension investment. Let's examine the 3 core components of this provision. First, the withdrawal limit. A member can withdraw up to 90% of their total Provident Fund balance. Second, regarding the investment destination, members must transfer the withdrawn amount directly to LIC India for the Varishtha Pension Bima Yojana scheme. And third, age eligibility. This option is available to any member who has reached 55 years of age.
चलिए पूरी प्रेजेंटेशन को एक बार जल्दी से रिवाइज कर लेते हैं।
चलिए पीएफ नॉमिनेशन के जरूरी रूल्स को जल्दी से समझते हैं। नॉमिनेशन क्यों और कैसे? पीएफ मेंबर को बताना होता है कि उनके बाद पीएफ का पैसा किसको मिले। इसके लिए ऑनलाइन नॉमिनेशन फॉर्म 2 भरें। आप पैसा एक से ज्यादा नॉमिनीज में अपनी मर्जी के परसेंटेज में बांट सकते हैं। अगर फैमिली है तो सिर्फ फैमिली मेंबर्स को ही नॉमिनेट करें, वरना नॉमिनेशन रद्द हो जाएगी। शादी के बाद पुरानी नॉमिनेशन इनवैलिड हो जाती है, इसलिए फौरन नई नॉमिनेशन भरना जरूरी है। फैमिली नहीं है तो आप किसी को भी नॉमिनेट कर सकते हैं, लेकिन ध्यान रखें, अगर बाद में फैमिली बनती है तो पुरानी नॉमिनेशन अपने आप रद्द हो जाएगी और आपको सिर्फ फैमिली मेंबर्स को ही दोबारा नॉमिनेट करना होगा। माइनर नॉमिनी के लिए माइनर नॉमिनी के लिए एक अडल्ट फैमिली मेंबर को गार्डियन बनाना जरूरी है। नॉमिनेशन बदलना। आप अपनी नॉमिनेशन फॉर्म 2 के जरिए ऑनलाइन कभी भी आसानी से बदल सकते हैं और ये बदलाव फौरन लागू हो जाता है। पीएफ के लिए फैमिली का मतलब मेल मेंबर्स के लिए पत्नी, बच्चे, डिपेंडेंट माता पिता और जिनके बेटे का देहांत हो गया हो उनकी विधवा और बच्चे। एक जरूरी बात, अगर मेंबर ये साबित कर दें कि उनकी पत्नी को पर्सनल या कस्टमरी लॉ के तहत मेंटेनेंस मिलने का अधिकार नहीं है तो पत्नी को फैमिली लिस्ट से एक्सक्लूड किया जा सकता है, जब तक मेंबर बाद में कमिश्नर को लिखकर उन्हें शामिल करने को ना कहें। फीमेल मेंबर्स के लिए पति, बच्चे, डिपेंडेंट माता पिता, खुद के और पति के और दिवंगत बेटे की विधवा और बच्चे। खास नियम, फीमेल मेंबर लिखित नोटिस देकर पति और उनके डिपेंडेंट माता पिता को एक्सक्लूड कर सकती हैं। अडॉप्शन, अगर मेंबर के बच्चे को किसी और ने लीगली अडॉप्ट किया है तो वो पीएफ फैमिली से बाहर हो जाएंगे। मुख्य बातें, पीएफ में नॉमिनेशन जरूरी है। फैमिली स्टेटस नॉमिनेशन रूल्स बदल देता है। शादी के बाद नई नॉमिनेशन करें। ऑनलाइन बदलाव तुरंत लागू होते हैं। फैमिली की डेफिनेशन समझना इम्पोर्टेंट है। सही और अपडेटेड नॉमिनेशन आपके अपनों की फाइनेंशियल सिक्योरिटी के लिए जरूरी है। घर के लिए पीएफ एडवांस। घर खरीदने, प्लॉट लेने या बनाने के लिए पीएफ से एडवांस मिल सकता है, पर सिर्फ एक बार। एलिजिबिलिटी, कम से कम 5 साल की पीएफ मेंबरशिप। कितना पैसा? लिमिट्स। प्लॉट 24 महीने की बेसिक सैलरी प्लस डीए या आपका कुल पीएफ बैलेंस यानी एम्प्लॉय और एम्प्लॉयर का पूरा हिस्सा ब्याज के साथ, या एक्चुअल कॉस्ट जो भी कम हो। घर या फ्लैट खरीदना या बनाना 36 महीने की बेसिक सैलरी प्लस डीए या पीएफ बैलेंस या एक्चुअल कॉस्ट जो भी कम हो। जरूरी नियम, स्पाउस के नाम पर खरीदारी नहीं, जॉइंट ओनरशिप सिर्फ स्पाउस के साथ। खरीदने और बनाने के रूल्स, अप्रूव्ड एजेंसी यानी जैसे सरकारी हाउसिंग बोर्ड, कोऑपरेटिव सोसाइटी से खरीदने पर पैसा सीधा एजेंसी को जाएगा। कंस्ट्रक्शन पहली इंस्टॉलमेंट के 6 महीने में शुरू और आखिरी के 12 महीने में पूरा होना चाहिए। प्रॉपर्टी की ट्रांजैक्शन विड्रॉल के 6 महीने में कंप्लीट हो। ये टाइम लिमिट्स हायर परचेज या कोऑपरेटिव सोसाइटी अलॉटमेंट्स पर अलग हो सकती हैं। घर बेहतर बनाने या रिपेयर के लिए होम इम्प्रूवमेंट्स, घर बनने के 5 साल बाद। लिमिट 12 महीने की बेसिक प्लस डीए या मेंबर का पीएफ शेयर जो कम हो। होम रेनोवेशन, पिछले हाउसिंग विड्रॉल के 10 साल बाद। लिमिट 12 महीने की बेसिक प्लस डीए या मेंबर का पीएफ शेयर जो कम हो। एडवांस रिफंड, पैसा बचने या काम अधूरा रहने की सूरत में। अगर एडवांस का पैसा खर्च से ज्यादा हो या प्रॉपर्टी न मिले या बने तो बचा या पूरा पैसा 30 दिन में एक साथ पीएफ ऑफिस को वापस करना होगा। रिफंड पहले एम्प्लॉयर के शेयर में फिर मेंबर के शेयर में क्रेडिट होगा। एडवांस का गलत इस्तेमाल, अगर पैसा गलत इस्तेमाल हुआ या शर्तें पूरी नहीं की तो निकाली गई रकम पर 2% पीनल इंटरेस्ट लगेगा और ये सैलरी से रिकवर होगा। आप 3 साल तक या पूरी रिकवरी तक जो भी बाद में हो पीएफ से कोई विड्रॉल नहीं कर पाएंगे। होम लोन चुकाने के लिए पीएफ पैरा 68 बीबी, अपने स्पाउस के या जॉइंट होम लोन को चुकाने के लिए पीएफ से पैसा निकाल सकते हैं। एलिजिबिलिटी 10 साल की पीएफ मेंबरशिप। लोन कहां से? स्टेट गवर्नमेंट, रजिस्टर्ड कोऑपरेटिव सोसाइटी, नेशनलाइज्ड बैंक्स, पब्लिक फाइनेंशियल इंस्टीट्यूशंस, म्युनिसिपल कॉर्प। कितना मिलेगा? 36 महीने की बेसिक प्लस डीए या पीएफ बैलेंस या बचा हुआ लोन अमाउंट जो भी कम हो। पेमेंट, पैसा सीधा लोन एजेंसी को जाएगा जरूरी डॉक्यूमेंट्स देने पर। चलिए पीएफ से नॉन रिफंडेबल एडवांस लेने के कुछ खास रूल्स को समझते हैं जो अलग अलग जरूरतों में आपके लिए मददगार साबित हो सकते हैं। 1. बेरोजगारी, पैरा 68 HH। अगर आपकी नौकरी किसी एक्ट कवर्ड कंपनी से छूट गई है और आप 1 महीने से लगातार बेरोजगार हैं, पीएफ बैलेंस का 75% तक निकाल सकते हैं। एप्लीकेशन बेरोजगारी के 1 महीने बाद दें। 2. बीमारी, पैरा 68J। आपको या आपके फैमिली मेंबर को गंभीर बीमारी, 1 महीना हॉस्पिटलाइजेशन या मेजर सर्जरी जैसी स्थितियों में ये एडवांस मिल सकता है। अमाउंट 6 महीने की बेसिक प्लस डीए या आपका पीएफ कंट्रीब्यूशन प्लस इंटरेस्ट जो भी कम हो। 3. शादी या बच्चों की पढ़ाई, पैरा 68K। मेंबर की अपनी शादी या उनके बच्चों, भाई बहन की शादी या फिर बच्चों की पोस्ट मैट्रिकुलेशन 10th के बाद पढ़ाई के लिए। शर्त 7 साल फंड मेंबरशिप, मैक्सिमम 3 बार। अमाउंट अपने कॉन्ट्रीब्यूशंस प्लस इंटरेस्ट का 50% तक। 4. फिजिकली हैंडीकैप्ड मेंबर्स पैरा 68N अपनी फिजिकल हैंडीकैप की सेल्फ डेक्लेरेशन देकर जरूरी इक्विपमेंट के लिए एडवांस 6 महीने की बेसिक प्लस डीए या अपना पीएफ कंट्रीब्यूशन प्लस इंटरेस्ट या इक्विपमेंट की एक्चुअल कीमत जो भी कम हो। अगला एडवांस 3 साल बाद ही मिल सकता है। 5. रिटायरमेंट से 1 साल पहले पैरा 68NN 54 साल की उम्र के बाद एक्चुअल रिटायरमेंट या सुपर एन्युएशन जो भी बाद में हो से 1 साल पहले तक। अमाउंट टोटल पीएफ बैलेंस का 90% तक। 6. 55 साल की उम्र में वरिष्ठा पेंशन बीमा योजना पैरा 68NNN 55 प्लस साल की उम्र में पीएफ बैलेंस का 90% तक LIC की वरिष्ठा पेंशन बीमा योजना स्कीम में ट्रांसफर कर सकते हैं।
This concludes our presentation. We sincerely thank each of you for your time and attention.